So SoFi posted its second consecutive profitable quarter this morning, but the stock was down 10% on the daily chart because they also delivered weaker than expected forward guidance, and that was what investors focused on. So the play is still this support band at $6.50. You can see how price, even though down 10%, is still within this sideways price action, kind of going back to March, early March. Again, this is the daily chart, so we have to really zoom out, and I'm going to zoom out to the monthly chart so you can kind of get a better feel of where price is relative to where price has been. So price bottomed out in December of 2020 when it formed a monthly buy level at $4.50. You can see you have this drop in price, one basing candle, and the rally out. And what happened when price pulled back into that zone? It shot all the way up to roughly $11.50. Now, zooming down to the weekly chart, and what we can see is within a bigger sideways trading range, which dates back to March of 2022, you can see you have resistance at roughly $10.25 and support at $6.50. And so what do you do when you are in a sideways range? You play the extremes, because at the $10.25 resistance, the sellers overwhelm the buyers, and as a result they push price back down, as we've saw several times. And when you're on the other side of the extreme at support, where the buyers overwhelm the sellers, price moves out to the next side of the imbalance. In between here, it's really choppy, signifying that the buyers and sellers are equally distributed. So let's get into the news before we kind of wrap things up. So investors in SoFi have certainly had a rough year. Shares are down 25% year to date, which vastly underperforms most of its firm's tech peers. However, the company also noted that, so this is why the stock declined, that expected net revenue for its upcoming quarter will be between 555 and 65 million, compared to analyst consensus estimates of more than 590 million. Additionally, Q1 revenue came in below the prior quarter's sales, suggesting a downward in now building with this fintech player. Now, many had expected the company's recent loan origination growth of more than 20% year over year to stoke continued outperformance, particularly as student loan refinancing activity should continue to see growth. However, muted growth from the company's broader lending segment appears to be driving these weaker expectations. But all in all, a revenue decline isn't likely to bode well for SoFi's bid to remain profitable in the coming quarters. Right now, profitability matters, and SoFi is likely going to need to push for greater efficiencies to create bottom line improvement. So kind of there you have it. Again, the still setup is still valid, as price did not climb violently enough into this support level. But again, the play is still in. If we get a continued sell-off, look for buyers to step in and push price higher. Thanks for watching. Subscribe. Please like the video.